We talk about order flow and traps and volume and trying to figure out where break-evens are all the time. One of my absolute favorite things to do, just as a side note. But what about within ranges, right? You'd think if you were in a range, the order flow, the volume, the majority of the volume would be in the middle. That's where all of the price action generally overlaps the most. And for some cases, you'd be right. But if you build the volume going into it, you can actually create a bit of a story. Hey there. John Henry here, SSFTG. Welcome to the video. If this is your first time here, welcome, my friend. Here at SSFTG, we trade everything from futures to stocks to virtual metaverse real estate. It really doesn't matter. If it moves, we're trading it. In this one, we're going to be going over order flow, covering predominantly ranges to kind of dissect them a bit further and understand how the range happened in the first place. So starting off looking at the range, first off, we want to use our order flow tool and see what happened on the initial drop. Obviously, this first dive underneath the low is when things kind of shifted. Everybody was looking for the bullish continuation. Wait a minute, and things changed. But when we broke a new low, the bears would have been looking for bearish continuation, and it goes all the way back up. So the buyers try to look for continuation. And they're looking, and wait a minute, that doesn't happen either. So we start transitioning sideways, and we got to see how did the market participants respond while it was sliding up, while it was sliding down, while it was jumping all over the place. So the first thing that we need to do is grab our order flow tool, and with this, we're going to measure from the top and drive all the way down to kind of see where were the market participants predominantly in this, right? On the dive down, it looks like the most traders took place at around 13,860.75, kind of on the lower end of the spectrum, so to speak. Now, as we're going into this range, let's say that we are right about here and we're trying to figure out what in the heck is happening, right? We're inside the wedge, we've got a lower high, and we're not really making any progress there. And we just saw the last dive down, the buyers tried getting a rotation. They probably had all of their stops underneath these lows, and they just got taken out to see the thing go screaming all the way back to the upside. You want to talk about revenge trading? That's a really good way to find some revenge traders. So with that same mindset, we can take the order flow and go from the bottom all the way up to the top and kind of dissect how did these traders respond? Well, on the way back up, they put a POC up at the highs. So when they started breaking above it, look at that. I mean, nothing happened inside of there. Nobody's home, just gone. Until we started getting up into here, and that's where we created the POC, and now we're starting to push down. So effectively, we're kind of seeing the bracket of the range being created by these two POCs already. This, anything above, is going to be seen as extreme value, both from the short or the long perspective, depending on what side you're on. And if they're beyond that area, generally speaking, buyers are going to be more predominant down here to kick the market back up, and sellers are going to be more predominant up here to try to push the market back down. It's creating sort of a barrier that we can work with. So highlighting this area with a box between the two POCs and creating a zone or a value area of interest. Every time we're underneath it, generally speaking, buyers are finding value. Every time we're above it, generally speaking, sellers are finding value. Now, let me kick this a little bit further forward so we can actually see what's happening here, and then we can go from there. There we go. Okay, so as the market's diving down, now we have entered high value territory. So what do we want to see? Well, measuring from the top on our way down, we want to see where does the volume shift? Where's the POC? On all of these other ones, it's been pretty obvious. Once they plotted it and they broke back on the other side of it, it just kind of took off back the other way. So we need to see that shift in volume order flow. We need to see the proof that someone's actually losing their ground or gaining their ground or what's actually happening here. And if we go a little bit further, we have a POC shift that just took place right there. Now we have our potential trigger. This is what's been going on every single time. And notice where it is. It's underneath in that value zone for the bulls to try to kick it up. The nice thing about this value zone is buyers can buy at the lower end, risking down to here, but their upside objectives are not only just back to high value, that would be the first objective, and you can see that's roughly 1-to-1. So if they can get better entries in here, their risk versus reward is even better. So if we use that, and we measure this up, and we put a 2-to-1 target right on the highs with a little bit of leeway, right? We don't want to force a target all the way through the top. And if we put our 2-to-1 target inside the range and assume that that's where the bulls start, all the way down to the 3-to-1 inside of that POC, or even inside the highs, to create kind of a zone of interest, Inside of this box is predominantly where all of the bulls who are looking for risk reward, the algos, etc., are looking to jump in and try to shove the market back up. And now we have a POC that's broken back above. We're starting to suggest that we might have ourselves a rally higher, and there it goes. Now, the thing is, if you're not watching the order flow, you would have missed that entire rally up, and you don't have a chance to respond. Once it breaks, it's gone. Now, as the market goes a little bit further forward and it's pushing and pushing and pushing, let's use the same thing. We're going from the bottom of this most recent move all the way up to the near high. The POC is in the middle of this whole thing. That doesn't help anybody. We go on over into the next lower high, and we finally shift our POC. This is the shot for the sellers to try to get the same thing that's been going on. This huge reversal all the way back up, the reversal back down, the reversal back up, trying to kick things off. They tried to get things going, and it failed. And look how aggressively they start exiting on the ramp up. But remember, we know how algos work. JP and Goldman and all of them don't take losses. They just average in and build a little bit further. So let's go along through the rabbit hole, because we can see the POC shifts just a little bit further up. And now, once we start losing this balance of power, so let's say that the sellers did try to go in short here, and they were stopped at above the high. Boo-hoo, right? We've got a little bit of a tear running down our face. But realistically, the risk on something like this is right around 50 ticks or so. We're still in extreme value, right? Up here is where the market is trying to push back down. And until we deviate, let's just say a deviation up, then sellers are going to be looking to try to kick the market back down again. And that's way up here. We have not even close to breaking outside of that value range. So as far as value is concerned, it's still A-okay if they break back down and try to shove the market lower. It's starting to make its approach. We're now challenging the POC, and now it's broken. In this case, what's their risk reward? If they entered in short here, their stop is above the highs, they're risking 186 ticks. That doesn't feel that great, but notably the target's back down to the range lows, that's 425. Easily 2-to-1, if not a little bit further up. So from this breakdown point, we know that shorts will be looking for the short side, and their downside objective will be a 2-to-1. We do need to make sure that it fits, so if they're putting their stop just above the highs and their targets are at a 2-to-1, the 2-to-1 objective is this green line right there. 3-to-1 is that line right there, back down to the lows. First off, the 2-to-1 fits at the earlier POC, which is kind of nice, and that's also still easily inside the range, which means that there might even be a little bit of room for icing on the cake. As far as the rotation down, we push down, we grab the first scalp objective. They're having a bit of difficulty, and you'll notice what scalpers do when they feel like they're losing ground. They start exiting more. Back up to break even. Sellers defending. We're back to the scalper's target again. We get a little bit of back and forth again. Now they're trying to challenge the shorts. Remember, pure invalidation is above the highs, and until that happens, we are in a high value area for shorts. There's a lot of reward versus the risk up here. Starts going into the next session, trap above the highs, a little bit of a push down, push back up. Oh, big flush down. Now, notably, there really wasn't much of a response at the 1-to-1. This is that orange line right there. So that does tell us that if we stay underneath this for the most part, which it is, we should be gunning for that 2-to-1 objective next, which would be right there. Oh no, they lost their grip above it. Are they going to hold it at the range highs? They went back to the range highs, immediately rejects back down. Now we're at the 2-to-1, back down to the range lows. Now here's the thing. If we are short in this whole move back and forth, we do know that from an actual risk perspective, meaning that that's how much they had to actually risk up to this high, down to their original entry point, which is right around there. That does give us a 3-to-1 objective for them, which is a little bit further down right about here, and the other one, which is back over here. So we've got one more pocket of interest if it's going to push for that extra icing on the cake. And so long as it stays underneath that 2-to-1 area, the sellers are going to try to maintain that. And now we've pushed down into that major area. Now, this is a big 1-2 punch, because if we combine all the stuff that we've been just talking about, we have cycled from the top all the way down to the lows, and we are now in a high value zone for bulls. So once again, we rinse and repeat. We take our order flow. We start all the way from the top and work our way down. This might have a POC up at the highs because of the way that this formed. And in this case, I actually have a data feed problem going into the next day for the data, so I can't even see what it is. C'est la vie. Sometimes you run into issues. But as far as the rotation, let's see how they played. And they rotated back up. I can't draw the order flow on it because it doesn't work, but as we can see here, if the sellers didn't take their targets down here, they realized, oh crap, maybe I should have taken that target when it starts drifting back up. The next time it was down there, they didn't let it sit around very long, and look at the response. Holy moly. Now, from a high value area, remember, the break point, the invalidation, is when we start deviating deviations of that move up, which happened here. Now, all of a sudden, we're not so much in a range anymore. From there, we can kind of shift our entire mentality back into trend or whatever else is going on from there. But effectively, inside of that range, just because it's a range, doesn't mean that there isn't a metric ton of stuff going on inside of there. You just have to dissect the order flow along the way and kind of build out where those areas of value are. If you can stack on top of that a larger trend, in this case the trend from the bottom was grinding its way up for quite a ways, it does add a little bit to try to stay within that direction. But overall, as long as you've got the value locked in and they're staying within those bounds, you kind of have the range sort of figured out. Hopefully that helps you out in ranges. I know ranges can be really, really frustrating, but when you're looking at the order flow and dissecting each move into the range, it can really give you a heads up as to why it's forming, why it's doing what it's doing, and where the bulls and bears are actually coming in. And sometimes it doesn't work, but the stops are nice and small, which is always good, and the reward is huge, which is always really, really good. That's going to do it for this one. If you have any questions, of course, feel free to shoot me an email, jhb@ssftg.com. Until the next one, though, thanks for watching, and we'll see you all then. Bye.